So we are out to eradicate entrepreneurial poverty.
Hey everyone, Abby Johnson here with Matterhorn Business Development. I am joined as always with Greg Winteregg, CEO of Matterhorn Business Development.
Absolutely.
And today I'm proud to announce that we are officially certified Profit First professionals.
Now that sounds really official. What does that mean?
It's super official. So basically, Profit First is a book written by Mike Michalowicz, and it's a method of cash flow management for business owners to use. Now don't pause the video. Don't click away. I promise it's not boring. So what this means...
They go,
cash flow!
Profit, no!
So what this means, Mike Michalowicz is on a mission to eradicate entrepreneurial poverty. It's a tongue twister. And we are on that mission with him.
Yes.
Because basically what we see too many business owners working their butts off, and we're helping them grow their revenue,
Yep.
in some cases doubling their revenue
That's right.
in a year. But their own income is stayed the same. They aren't making enough money. Their employees are making more money than them.
They get a profit and loss statement back from the accountant who says, oh, you made this much profit. And the first comment is, where is it? So we're tired of that, and we are doing something about it.
All right, so we're gonna tell you some of like the basic principles of Profit First and a general overview of how this works. So.
Yep, so first of all, you should get the book. Profit First by Mike Michalowicz. I can't even begin to spell that name, but if you just go to Amazon, Profit First, Mike M, you'll find it. All right, so now, the typical business formula is money comes in, you pay your expenses and run the company, and then profit is what you have left after you run the company.
Right.
And basically what happens is the money comes in, and then the expenses chew up all the money.
Because it goes in a bank account. It all goes into a bank account.
It all goes in the same account.
There's all your money. You pay your bills, and then you're like, cool, I have a couple $100 left. You know, I needed a new computer monitor, so I'm gonna
just go get there's the money.
that. Yeah, I have the money to pay for this, so I'm gonna go.
And you
go
do that week after week, month after month, quarter after quarter, and at the end of the year, you have no money.
Right.
But what happens from an accounting standpoint is you get depreciation of your computer and depreciation of your equipment, and so now you show a profit, but all the bank accounts are at zero.
Right.
So what Mike has done is actually quite genius. He switched the formula. So here's the formula. The money comes in, the profit comes out first, and you run the company with the money that's left. So money comes in, you take out profit, you take out owner's pay, you take out taxes, and then there's money left. And the percentages are all laid out in the book, and we're certified now to help you with those percentages, but then the money that's left is all you have. So what that means is if you would like to have these swanky digs in an office for $2,000 a month, if you're taking the expenses out first, you go, oh, look, we have money to pay $2,000 a month. But if you take out all of your other profit, taxes, et cetera, and you go, oh, all we got is $500, we're gonna have to wait on the swanky digs.
Right.
Am I sounding too weird?
No. And to be clear, that does not mean that you pay yourself and then you don't pay your staff.
Exactly.
I've seen it before, and it makes me very angry, and I just want to be clear that that is not what this is promoting or what we at Matterhorn promote. There are ways to deal with that if you can't pay your staff.
Right.
But unfortunately, most of the time, it's the owner that isn't getting paid.
Exactly.
And that's what this helps handle.
And we just met with somebody here a few weeks ago. Company's been in business for a year. They're all excited. They're making a profit. There's the owner and two staff, but the wife is upset because the staff are getting paid more than the owner.
Right.
The owner's putting in 12, 14, 16-hour days. So here's the concept behind it. If you only have this much money left for expenses, then you have to get more creative.
Right.
If you have all of the money and you're taking the expenses first, you can be kind of lazy. You can be a spendthrift. You can be sloppy. And then here comes all of the money's gone out of the account and there's nothing left for profit.
Right.
Now, Mike has a really great analogy in the book that Abby's going to tell you about.
So the analogy is with a tube of toothpaste. So we all know you get a fresh tube of toothpaste and you just kind of grab it and you squeeze it on your toothbrush and you're like,
Half
right?
of it falls in the sink.
Some of it falls in the sink and you're like, whatever, squeeze some more on there, no big deal. But what happens when your toothpaste, your tube you're squeezing, you're having to squeeze it.
You're rolling up the end.
You're rolling it up, you're trying to push every little, and then I sometimes will be like, I should be able to get by with that much. Yeah, that's fine. So the idea is that the more there is there, the more is going to be used.
Right.
So if you are lowering the amount of money in that operating expense bank account, then you are going to have to get creative. You're going to start calling your suppliers and negotiating. You're going to finally go through and probably cancel online subscriptions that you don't actually need.
The 10 that you don't need.
Right. The 5 Squarespace accounts that aren't actually doing anything for you, etc. So the idea behind this is also very similar to the envelope idea. So that's the idea that you take your money and you have a food envelope, you have your house envelope, you have your fun envelope, and whatever in that envelope is how you spend your money.
That's all you get.
So with Profit First, that is done just with bank accounts, opening various bank accounts and dumping these percentages into those accounts.
So the money comes in, and then there's an account for profit, which is going to be 5 or 10%, depending on the industry and depending on the revenue in the company. He has all the formulas there. And so there's the profit account, there's the owner's pay account, there's a tax account. And all the money from what comes into the checkbook goes into these accounts, and then whatever's left, that goes into operating expense.
Right. So the minimum would be 5 bank accounts. And believe me, it's not that hard to manage 5 bank accounts. How many of you actually look into your QuickBooks and look to see where your bank account is at and how many checks you've written, yada, yada, yada? Probably not many. I do, but that's because I do the bookkeeping. Right. But most people just open up their bank account and say, that's what I have in my account. That's what I can spend.
Right.
And that's part of what also this helps with, is you can just look at your bank account on your phone and know what you're allowed to spend that week or that period of time.
And I've done this for years. I did this in my dental practice, and I got a report every week from my office manager. I had this much in reserves, I had this much in the building fund, I had this much in the tax account. I even had a Corvette account to buy my first Corvette, and I paid all the taxes on April the 15th, and I was $10,000 short in the Corvette account to go get my car. Well, glory be, I had $10,000 left over in the tax account. That's like my refund. So I went and got my car. So it is like the envelope system, and I know it sounds complex, but here's what we're going to leave you with. We always want to leave you with a battle plan. So do this. You probably already have an account, a savings account or something. So all the money is going in. What I want you to start doing this week is take 1% of whatever comes in and put it into that account. And just pretend like it's not there to blow. Just start accumulating. Buy the book immediately. It's going to come to you in a few days, but you will already start, you'll have $10, $20, $100 or more into that Profit First account. So we are out to eradicate entrepreneurial poverty. We highly recommend you buy the book, and if you need any help, then we're absolutely here to help you as certified Profit First professionals.
So we can help do a full profit assessment and rollout plan for you. You can just read the book and go ahead, but we have extra knowledge and experience now that we can use to help you implement this so that you aren't going 0 to 60 right away. Do it on a nice gradient and get you taking home the money you should be taking home.
Yes. Take your profit first.
We'll see you next time.